Hey guys, Chris from the Hidden Reserve, and in today's video, what I'm going to be breaking down is a huge misconception that I see in the life insurance space, which is how soon you can actually become your own bank. A lot of people think they can just put $50, $100 a month into a cash value life insurance policy, and all of a sudden they're going to be their own bank and they can start borrowing against the cash value and doing all these things with it. That is not how it works at all. And another thing that I see is a lot of people think that they put the $50, $100 a month into a policy and they get a $300,000 death benefit, that they're borrowing against the death benefit. That is not what you're doing at all. That is not how it works, and I'm going to break it down a bit further. So the reality is, how soon can you become your own bank? I mean, it really depends on how much money you're going to be funding into your policy. For some people, they might be front loading their policy with $100,000 and they have access to 80,000 of that, 90,000 of that within the first 30 days. Well, that person became their own bank pretty quickly because they had the cash. And for this strategy to work, you need to have money. You're not going to be able, in my opinion, some people might disagree, but you can't be your own bank. You shouldn't even think about being your own bank until you have basic things in order with your finances. Are you out of debt? In most cases, because it can be a good tool to help pay off debt. That's a different conversation. But for the most part, you want to be debt-free. Is your income stable? Do you have an emergency fund? Do you have other investments? There's different layers to doing this, in my opinion. But the point is, you have to fund these policies with a lot of money up front to become your own bank relatively soon. Because otherwise, if you're funding it $200, $300, $500, $1,000 a month even, it's going to take quite a bit of time to build up enough cash value into your policy to even make sense of using it. Because if you build up, if you're funding it $200 a month, that's $2,400, right? My math's bad. $2,400 a year. I mean, it's going to take you just over 5 years to even have a significant or even a decent amount of money in there to utilize. I mean, that's just my opinion, and it really does depend on what you plan on using the money for. But if you're trying to use this for real estate investing, for example, I mean, you have to have cash up front that you're going to dump into the policy to accelerate how much money you have in there to use. Because otherwise, you're just going to be waiting forever, funding it monthly. And again, there's different strategies. If you're not planning to be your own bank and you're using it as a supplement to retirement down the road, that's a whole different conversation. That's a way different conversation, because funding it monthly in that case might make sense. Keyword might make sense. But if you're trying to become your own bank and you're trying to do it as soon as possible, the straight flat out, you need to have money to do it. You need to have quite a bit of money to sock away or to front load, dump into the policy, to have enough cash available immediately to start using, or within a relative time or within a decent time frame, which looks different for everyone. But if you want to become your own bank in a year, you got to front load it pretty heavily. So I hope this video clears up some things around how soon can I become my own bank. The question is, or the answer is, depends on how much you're funding it with, and it will look different for everyone. So hope this video helps. If you're new to the channel, subscribe. If you're watching this on another platform, make sure you follow me. I put videos like this out every single week. And if you do have any questions, just leave them in the comments below. I'd be happy to answer them there. And hope you enjoyed. I'll catch you in the next video. God bless.